All right, welcome to another market recap and a look ahead. This is Chris Trade. And if you're new to the channel, don't forget to hit the like button. And if you stick around, I've actually got a surprise at the end of the video because I'm going to show you 3 stocks you should be paying attention to. If you've been following my work, you would have noticed that I've been going on and on how the Feds are not going to be tapering anytime soon. Now, last week, the Feds had their FOMC committee meeting and they sent out a statement. And as you can see, the main news medias ran with this, right? The Fed will start tapering bond purchases later this month. Okay. Now, did I get it wrong, or is the Fed's actually bullshitting here? Okay, so this is the Federal Reserve issues FOMC statement, 3rd of November. All right, so let's just quickly read you that the Feds will buy their T-bills by at least $70 billion per month. Thereafter, you're looking at least $60 billion per month. Thereafter, at least $30 billion per month. Well, that sounds like tapering, doesn't it? Not exactly. So if we just scroll down here and what they're saying, the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal. Okay, so this is not tapering, this is calibrating. They have basically set the minimum of what they can purchase. Nowhere did they put a hard cap at the max that they can actually purchase. And they gave themselves a bit of that leeway right here that just depending how the market's going to be, we're just going to snap up as much as we want. And that is not tapering. This is just simply calibrating, all right? This is why the markets ended up pulling off record highs, record highs, record highs. You had the NASDAQ, record high. S&P 500, record high. You had the Russell, record high. The Dow, record highs. Simply, the market shrugged this off because it's rubbish. This is not tapering. This is calibrating. Very big difference. Then on Friday, we had from the US a report that was released that the economy is bouncing back in terms of the unemployment rate shrinking, right? That means that more people are being hired. Well, again, is that really the case? Okay, so again from CNBC, a vicious job market feedback loop is making the great resignation even worse for employers. So I just wanted to scroll down here. So the private sector job growth in October tracked by ADP came in at 500,000 jobs added earlier this week. The best month since June. Well, fantastic. The economy is obviously regaining, right? And the government's non-farm payroll reports released on Friday showed a gain of 531,000 jobs, well ahead of the 450,000 jobs forecasted. Okay, but again, the devil is really in the details because if you have a look here, but the labor force participation rate didn't rise at 61.6% and is still below its February 2020 level from before the pandemic, which represents 3 million fewer Americans in the workforce. Right, so this actually gives a true picture of the US economy in terms of their workforce. What is actually going on here? Well, majority of the Americans really don't want to go back to working for a boss unless certain conditions are actually met. A, they get a higher pay raise. B, they get more flexibility in their working hours. And C, they can work from home. On the other side, there was a very interesting statement that was actually made by a well-known economist. So let me just go to her quickly. And this is from Danielle DiMartino. And basically in her interview that she had on Fox Business, people are being automated out of jobs. All right, so that's a powerful statement. I actually did a video, and the link will pop up shortly, on how the robots are coming for your jobs. All right, people are just far too stressed out. And most Americans know this. They don't want to go back to that stress. They don't want to go back to that rat race. So now you've also got this other force coming into play of, well, you can automate the jobs now. So this is going to start getting a bit of steam. So nowhere really in sight are you actually going to see the Fed going to be tapering yet, based on all of this crap that's been happening. They will absolutely decimate the market. So forget it. And as you can see, the devil is completely in the details, right? And I want to drive this home by another article by Bitcoin Magazine, and they gave their thoughts, right? Thoughts on the latest FOMC press conference. All right, that was the day after. So pretty much they just touched base on what Jerome Powell had to say: unemployment, supply chain issues, quantitative easing or asset purchase tapering, on raising rates, understanding labor markets. But if we just go down here, basically Bitcoin fixes all of this crap. And so right, we really don't need the central banks. So trust is broken between the Federal Reserve and the American people. There are those of us who have known this for years, but some are just coming around to it, with the senior officials at the Reserve clearly profiting on inside information. So Bitcoin stands as a trustless system that is absent authority. Don't trust, verify. So what we've got is unemployment ran rampant with the advent of government shutdowns. Right, that was one of them. Then you've got the supply chain issues wouldn't have happened nearly to the scale which they have if those proper precautions were taken. And the debasement of currency didn't send the price of imports and exports to the heavens with far less laborers available. Okay, quantitative easing or asset purchasing is the accumulation of garbage asset nobody wants when the economy goes to crap. If the economy cannot be propped up by fake money, then the rates can't stay low. When the rates go higher, less people borrow. If less people borrow, the economy struggles through, but it manages to fight extreme forms of inflation through smaller recessions when you rip the band-aid off. The proper response and sound money principles, the labor market could have been maintained far better than it currently is, and the rules like the SLR, the supplementary leverage ratio, being dropped so banks can spend more imaginary money can't exist, or should be don't exist. So this economy is attempting to stand on the failing foundation of imaginary money. This is why the Feds will not taper, and while they will continue to buy as much assets, well, as much T-bills and assets and God knows anything else as they so please. They are the lenders and the buyers of the last resort. Okay, so let's go and have a look at the markets and see what we can expect next week. As you can see, I mean, look at this. Right? Everybody was calling like for a major economy crash. It's going to crash. It's going to crash. It's going to crash. Just look at that. Every Tom, Dick, and Harry on this planet just snapped this up and it just went higher. All-time record high. All-time record high. All-time record high. It's crazy. Okay, I mean, look at this. Okay, look at crude oil. All right, crude oil has bounced back lovely. Okay, so you got the oil propping up the stock market. You've got these gaining gains. You got the US dollar getting weaker. And what am I expecting for Monday? A very good turnout at the markets. In fact, I am expecting more record highs from now until the end of this year. You're just going to get more record highs and more record highs and more record highs. That's the environment that we're in. Having said that, let's see how this all plays into the cryptocurrencies. We've got a little bit of news here. We start with Bitcoin. I would like to see Bitcoin drop to about 55,000, but given the environment that we're in, it seems to just be ranging here, but it does seem to be taking that leg up. It did find some really nice support here at the 58 level, and then again at the 60k level, and it does seem to be on its upward movements. However, there could still be a little bit of down pressure. Let's just put this here. Hitting up there, just getting rejected, and potentially could at a minimum, well, at a maximum, sorry, at about 55,000 range, because it's got a bit of support here, but it's really got some decent support here. It's got support here, so it will need to take some considering beating in order to get down there and then shoot up. But ultimately, as mentioned in my previous videos, Bitcoin, this is very healthy. It's simply going to be looking to form a leg up. So while most people are expecting this to look a little bit dumpy, then expect a maximum of 55k, but ultimately looking to leg back up And I will say that Bitcoin will break its all-time high, and we could look really anywhere from here to December, around about this period. I'm expecting Bitcoin to smash its all-time high. Okay, so staying with the cryptocurrency side of things, we got a fantastic Puerto Rican news here, and pretty much Puerto Rico to become cryptocurrency capital due to favorable tax laws. Now, again, I did another video talking about Money Unplugged, and in that video, I spoke about how South America, thanks to China, is going to end up becoming a powerhouse in this space. In Puerto Rico, I'm not surprised hearing this news because Puerto Rico has always kind of been this tax haven, particularly to the United States because, well, Puerto Rico is a colony of the US. So I think this is, again, really nice movements that South America is actually making. So just pay attention to some of the things that are happening in Puerto Rico. Right, another thing that's been really grabbing some headlines lately is obviously Facebook ended up changing their name to Meta, which is quite interesting because I think in Hebrew it actually means dead, which is quite interesting. Right, but you can see that pretty much this is really just from Digibyte, and as you can see, there's massive movements really going into this entire concept of the metaverse, right? And pretty much, I really loved this picture because you got, Ready Player One from the movie, which in itself is showing a metaverse. And we're kind of getting up to that type of world coming our way. And I'm going to be doing a video sometime soon on augmented reality and mixed reality because the metaverse itself is going to be quite immersive. And hence, you're going to start getting this Ready Player One type of setup coming away. And I'm very, very excited for this. So I thought this was just a really cool image that Digibyte did share. But as you know, Facebook is really going full in on the metaverse, and it's something you really got to pay attention to. Another one is actually Microsoft's metaverse. Okay, Beats Fit Pro review. Now, I'm going to tell you the 3 stocks, or actually 4 stocks that you've got to be paying attention to. Okay, and one of them clearly is Facebook. The other one, like I just showed, is actually Microsoft. But there's another 2 that you wouldn't have thought of, and that is Metaport. And my favorite one, because it's just so left field, but it makes so much sense. If you just scroll all the way down, is actually Roblox itself. All right. My kids love Roblox. You can imagine that there's millions and millions of kids that love Roblox, and they've been experimenting a hell of a lot with virtual reality. So it just makes complete sense that Roblox will also start competing into this entire immersive metaverse space with cryptocurrencies. It's inevitable. It is coming. But a lot of it is going to be coming from the gaming sector themselves. And it just makes total sense to really start looking at Roblox as a potential stock that you should really be paying attention to. All right, so this is Chris Trade. Be safe. Peace.